Did you know that in just 1 month, the US stock market lost $4 trillion in value? It's a jaw-dropping drop that has many investors questioning what to do next. But here's the thing. While most people are scrambling to protect their portfolios, legendary investor Warren Buffett is doing the exact opposite. He's ready to pounce. Why? Let's break it down. And I promise by the end, you'll see this market drop in a whole new light. Welcome to Factful Finance. I'm so glad you're here. Today, we're diving deep into one of the most famous strategies in the investing world, Warren Buffett's approach to buying stocks during market turmoil. Trust me, you'll want to hear this. First, let's take a moment to absorb the gravity of the situation. The market has taken a massive hit recently, with the S&P 500 down more than 8% from its peak just a few weeks ago. The Nasdaq, the darling of tech stocks, is in a 10% correction, and the losses don't stop there. Tesla alone saw $125 billion wiped off its value in a single day. Now, these declines are enough to shake anyone, but not Buffett. Why isn't Warren Buffett worried? Because he's been through this before. When the market drops, he doesn't panic. He sees opportunity. Buffett's strategy is clear. Be fearful when others are greedy, and greedy when others are fearful. But let's take a closer look at what that really means in practical terms, especially when the market is bleeding $4 trillion. For starters, Buffett sticks to what he knows: high-quality companies with strong fundamentals. While the market may be in turmoil, the core strength of a company doesn't suddenly disappear just because the stock price drops. Imagine this. You're Liam, a young investor, and you've just saved up $10,000 for your first major stock purchase. The market takes a tumble, and you're staring at red numbers across your screen. The panic sets in. Do you sell, cutting your losses and running for cover? Or do you take a deep breath, zoom out, and ask yourself, is this company still strong? Is this drop temporary? If the answer is yes, just like Buffett, you buy. Buffett's strategy isn't just about picking the right companies. It's about patience. The man has a long-term mindset. For him, a market correction isn't a crisis, it's an opportunity. If you're looking to follow his lead, you'll need to do the same. Think long-term. Stocks are on sale. Are you going to wait for the perfect moment? Or are you going to start buying when fear is at its peak, like Buffett? Now let's talk about one of Buffett's favorite principles: value investing. It's about identifying undervalued companies with solid growth potential. Right now, many of these companies are discounted because of the broader market uncertainty. But remember, just because the market drops doesn't mean a company's intrinsic value has dropped with it. For instance, let's take Tesla's massive drop in value. It's easy to panic when you see a stock plummet, but if you've done your homework, you'll know that a strong company can bounce back. Buffett loves to buy when stocks are trading below their real worth. In his eyes, the temporary market chaos is just the kind of environment where long-term wealth can be built. Let me give you another example. Amelia, a mid-career professional, is watching the market slip further. Instead of selling her investments in panic, she follows Buffett's lead. She buys more of the stocks she believes in. Over the next few years, her portfolio grows, and she's sitting on a mountain of wealth, while others are still waiting for the dust to settle. Buffett also stresses the importance of sticking to your investing principles, regardless of the noise. The constant barrage of headlines, trade wars, economic downturns, tariff talks, can drive emotions and cloud judgment. But if you know your strategy and you've picked solid companies, then stay the course. Just like Buffett. Now let's talk about the current economic environment. With tariffs and the shifting policies under the Trump administration, market uncertainty has reached new heights. And while many investors are worried about a potential recession, Buffett isn't backing down. Instead, he's looking for undervalued gems. He's waiting for the right moment when fear drives prices low, and that's when he strikes. Buffett's strategy isn't just for the ultra-wealthy. Anyone can follow this approach. Whether you're just starting out like Noah, who's new to investing, or you're a seasoned pro like Ava, you can apply these principles to your own portfolio. The key is to be patient, think long-term, and buy when others are fearful. But here's a critical point. Know your risk tolerance. This isn't a strategy for everyone. It requires the ability to withstand market volatility and the conviction to hold on to your investments when others are selling. If you're more risk-averse, it's okay to take a more conservative approach. But remember that the best time to buy isn't when everyone's confident and the market is soaring. It's when the market is down and panic is setting in. Now, I've shared Buffett's strategy: buying quality stocks during market dips, staying patient, and focusing on long-term gains. But what about you? What do you think? Does this strategy resonate with you? Drop your thoughts in the comments. And while you're there, if you want more insights like this, hit that subscribe button. There's so much more coming your way. And just a quick reminder, this content is for educational purposes only. If you're considering making major changes to your investments, be sure to consult with a certified financial professional for personalized advice. Remember, the market goes through cycles. Ups and downs are normal. The key is to stay focused, stick to your strategy, and keep your eyes on the horizon. Want to know what's coming next? Trust me, you won't want to miss it. See you in the next one.